Everybody, this is Alex Gerchik from Gerchik and Company, and today, as usual, every 2 weeks we're going to bring you the analysis of the market and give you some recommendations. For everyone, basically, who wants to get in touch with me or ask the questions, my email is agerchik@gmail.com. You can write me and I'll answer personally. I don't have a secretary, I don't have any helpers. I do everything in my own. What we did last time? Last time I have an email where basically we recommend some levels for the few currency pairs. We start as usual, let's say with the currency, let's say we start with the euro, the most popular pair. The last time we had a level of 113. That was very important level. If you can see, our webinar was done in the 19th of October. As you can see, October 19, the price was away from a 113. Now you can see it. Once basically the price brought 113, that's the only way to go down. What do we have right now? As you know, currency is not like a, oh, I'm sorry. I talk and I don't show charts. Now we're gonna see charts. Okay, great. The level last time, that's what basically told you, it was 113 right here. So what do we have? That's the day we did recommendations, and the 19th of October, and the level was 113. Everybody knows once the level reach, you have only two ways to go. Of course, it's up and down. What we're doing, we're not guessing it, we're just saying one thing. If it goes below the level, we're short. If it stays above the level, we go long. So what do we have? At the 113, this was very important level. Once the price break down 113, we're going to go much lower. What we have right now, as you can see, I mean, I did not expect it's going to be such a big down day. And I only expected that we're going to go down probably to 111. That was before a very important level. But fortunately or unfortunately, fortunately for those who was in the positions, and unfortunately for those who were not in positions, we went below all the way to 109. So what do we have right now? Right now we have a new range. It's a 111 and 109. If we're going to break to 111 to the upside, and the most important thing, we're going to close above 111, then we're going to go higher, probably back to 113. If we're not going to be able to go and we're going to break 110, you see that's the level we have, 110. It's the first stop after the breakdown. If we're going to go below 110, then probably we're going to go to 109 and even probably go lower. My advice to you, a lot of times you watch TV, you watch news, you want everything else, but the problem is you have technical analysis. Technicals will tell you everything about the currency or a gold or anything you trade. So the most important thing is the levels. If you have the right levels, basically then you're not going to have a problem, and you are going to trade in the right direction. The most important thing is the level and the right direction of the currency pairs. Let's go to a different one, to yen, Japanese yen. Japanese yen, we said it last time, I'm looking at my notes, the level of between 84 and 8,300. 0.83, 0.84. As you can see, that's the right here, the day of 19th. As you can see, the level was 114 and 113. I'm sorry, 84 to 83. As you can see, we broke down, went to 82.5, and now our level is a little different. Now we have a different zone. It's 83.5 to 82.5. As you can see, when you're in the range, in the tight range, like in the Japanese yen, you can only trade from up or down levels. My advice to you, don't get inside somewhere because the stop is too big and the ATR is too small, and you're not going to be able to make money. So most important thing, look at the levels. So now we have a new levels at the Japanese yen, 83.5 to 82.5. If we're going to close above 83.5, we're going to go much higher. Once we're going to go below 82.5, we're going to go much lower, probably all the way to 81. That's the Japanese yen. British pound. British pound, last time we have a level. I look at the notes. British pound, 155, 154. Just I want to show to you something that I'm not taking the levels from nowhere. That's the levels that we discussed last time. You see? So the British pound 155, 154. Let's see what we have. 155 on the 19th. Perfect. You see, excellent range. Right from 155 with the false breakout down, we went all the way to 152.5. And as you can see, there was a perfect signal on the short side, perfect signal with a very short stop. Basically right now, we're still going between a new range, 155, 153. You see, that's a new range for us. Once we're going to break above 155 and stay above 155, we're going to go much higher, probably to 157 and higher. You see, that's the most important thing. So the most important thing for you guys is to, first, it's to understand the levels. Once you understand the levels, then it's going to be much easier for you to trade. So 153 and 155, that's a new level for British pound. As I said, the most important thing, not only break 155, stay above 155, close above 155, and then we're going to go much higher, probably to 158 with the first internal level on 156.5. Next one, Canadian dollar. Canadian dollar, we had a level of 0.7750, 0.77750 right here on the 19th. You see, right there, we closed at, it worked out perfectly well for us. Right there, right below 0.7750, you see, right from there with the short stop, it went all the way to 7550. Right now, we have a very new level, 76.5, 75.5. You see, that's a new level. Once we're going to close above 76.5, we're going to go to 77.5. In order for us to go much higher, somewhere in the range of 79.50, we got to close above 77.50 on the daily chart. On the daily chart. You can really trade even the short term on an hourly chart, but only above 77.50. As you can see, we have new levels right now, and with those, we're going to trade. Swiss francs. Swiss francs, I don't see the sign there, but let's see Swiss francs. We broke the down level with the Swiss francs, and now we have a very strong level of 102. You see, that's the level, very strong level. False breakout, false breakout, false breakout, false breakout. If we're going to stay above 102 and close above 102, we're going to go much higher, probably to 104. And if we're going to stay above 101, then we're going to definitely have a problem, and Swiss francs is going to have a problem, and probably most likely we're going to go below 1. So they're going to be 1 to 1. Australian dollar. Australian dollar, right here, Australian dollar, 0.72. On the 19th, you see, on the 19th, the level that we have, Australian dollar, right here, I want to show it to you. Australian dollar, 7.2, see, 0.72. So what do we have on the 19th? That was the last webinar. On the 19th, we isolate the level of 72. Once we broke the level, you see we went all the way down. Now we still have a level of 72, 71, and 73. So basically right now we have to go first to 72 before we're going to go higher. 72 is a very strong level. You see, it's a first rebound, it's a false breakout, and it's a first rebound. So 0.72, it's a very strong level. Any close above 72, we can go much higher. Anything below 70, 50 to 0.750, we're going to go much lower, as you can see. What I'm trying to say in this webinar, don't try to guess the number. Just try to isolate levels and trade those levels. That's the most important thing, because people always have a problem. They try to guess the number, they trade everything. Don't trade everything, trade only the levels that you understand. New Zealand dollar, right here, New Zealand dollar, 0.67. On the 19th, that's the level 0.67. You see, the level was broke, but it was a false breakdown. And we went higher. Right now, we stay in between the level of 76 and 78. I think personally that New Zealand looks pretty strong, above 68, 0.68. Once you see a New Zealand dollar above 0.68, we can see a very strong signal and go much higher. If we're gonna basically stay below 0.67, stay below 0.67, then we're gonna have a problem and we're gonna go lower. What I want to tell you, we basically went through a few pairs. Right now, I want to talk about gold. You see, just to let you know, last time we talked about the range 1160, 1180, 1160, 1180 for gold. As you can see, gold broke exactly 1160. That's the level we had before on the 19th. You see, 1160, 1180, 1180, 1160, 1180, 1160 for 5 days. Once it broke 1160 and it stays below 1160, we have a downside for the gold, and we really describe that level. Now it's a very strong level at 1130. You can see. You see, first big breakdown, and many times we trade there. So anything below 1130, we're gonna go much lower, probably back to 1100. If we're gonna stay above 1130 and break above 1150, we're gonna go much higher. Oil, strong level 48, 44. You see, now we're in the rise. First stop 48. If we stay above $48, and the $48 is going to be strong level, and we're going to stay above 48, we can have a very big upside to 50 and maybe to much higher. As I said before, I'm trying to give a short recommendations. I don't like huge webinars for an hours and everything else. My email again is AGERCHIK. If you have any questions about the way you trade and everything else, right now we're going to do a few algorithms and make sure they're going to be in English for you guys. If you have any questions, just write me an email, agerchik@gmail.com. I'll be more than happy to answer to you. You can send us your trades, and we're going to put the trades together. Next time, besides the currency pairs analysis, I'm going to put a few trades together and explain why this trades happens. So the most important thing, stay with us. We're going to bring you a lot of interesting stuff. It's been Alexander Gerchik from the Gerchik Co, and my email is agerchik@gmail.com. You're more than welcome to ask all of the questions, and all of your questions is going to be answered. All the best, and thank you.